Let's be honest, dealing with HMRC can be stressful, right? Especially when it comes to business expenses. Well, things are definitely changing for the 2025/26 tax year, and today we're going to break it all down for you, using an absolutely fantastic guide put together by the experts over at My Tax Accountant.
Yeah, it makes me feel guilty and doubt myself for absolutely no reason. Does that sound familiar? This is a real quote from a UK sole trader, and it just hits the nail on the head, doesn't it? That sinking feeling when an official-looking email drops into your inbox, it's enough to make your stomach churn. That's exactly why we need to pull back the curtain and see what's really going on.
So, if you've ever gotten one of those so-called nudge letters from HMRC about your expenses, trust me, you are not alone. They're basically these automated prompts designed to get you to double-check your figures. But let's be real, they feel less like a gentle nudge and more like an accusation, right? So, let's cut through all that anxiety and get straight to the facts so you can file your taxes with confidence.
All right, so here's our game plan for today. We're going to kick things off with HMRC's 2025 crackdown. Then we'll meet their AI detective. Yes, you heard that right. We'll absolutely nail down the wholly and exclusively rule, which is super important. We'll look at the top triggers for an investigation, and then the crucial part, how to build your best defense. Finally, we'll wrap it all up with a simple checklist to help you get your taxes right. Okay, let's dive right in. Section 1, HMRC's 2025 crackdown. You might be wondering, why now? What's the big deal? Well, it all comes down to the recent 2025 budget. It's put a real laser focus on closing what's called the UK's tax gap, and guess what's right in the crosshairs? Yep, incorrect expense claims. This is not just business as usual. And get a load of this number. £27 million. That's how much tax HMRC managed to recover in just a pilot program back in 2024, specifically targeting incorrect expense claims. You know, it was so successful that they've now rolled this thing out nationwide. So let's be crystal clear. This isn't about random spot checks anymore. This is a highly targeted, data-driven campaign.
So you're probably asking yourself, does this affect me? Well, have a look. Are you a sole trader, a freelancer, a landlord, or a small business owner? Basically, if you file a self-assessment tax return and you claim expenses, you're on the list. This crackdown is casting a really wide net, so it's something we all need to pay close attention to.
Which brings us neatly to our next section. How on earth is HMRC getting so effective at this all of a sudden? Well, the answer is technology. And honestly, this is where things start to feel a little bit like a science fiction movie.
Say hello to the Connect system. I want you to think of it as HMRC's ultimate digital detective. This isn't just some clever software. It's a seriously powerful AI that's been learning and evolving since 2010. It sifts through literally billions of data points about you, from your bank, property records, online platforms, you name it, to create this incredibly detailed picture of your finances.
And this slide really shows you the power of it all. See, on the left, that's what you declare on your tax return, right? A few simple figures: income, expenses, maybe some mileage. But over on the right, well, that's what Connect sees. It sees your bank data, your property records, your DVLA information, international data. Heck, it can even see your social media posts. You know that fancy holiday you posted about? If what you declare doesn't match up with the picture it's painting, boom, that's a red flag.
Okay, so with that level of high-tech scrutiny going on, understanding the rules has never been more critical. Which leads us to Section 3, and what is, without a doubt, the single most important principle you need to know for claiming expenses.
It's called the wholly and exclusively rule. Now, this is the absolute bedrock of UK expense law. It sounds simple, but it is super strict. For an expense to be deductible, its one and only purpose has to be for your business. If there's even a sniff of a personal element to it, what they call a dual purpose, then by default the whole thing gets disallowed. But wait, that's not the end of the story, and this is exactly where so many people get tripped up.
So, what's the solution? It's a little word called apportionment. You see, while you can't claim an expense that has a dual purpose, what you can do is identify the part of it that is exclusively for business. Here's a great pro tip to show you what I mean. Let's take Anja, a freelance graphic designer in London. Her phone bill is £50 a month. But of course she uses it for personal calls too, right? So she can't claim the full 50 quid. Instead, she calculates that about 60% of her usage is for work. So £50 times 60%, that's £30 she can claim. Simple. But here's the absolute killer detail, the part everyone forgets. Look at step 4. She makes a note of how she worked out that 60%. That little note, that's her entire defense right there.
All right, so now we know the golden rule. let's look at what actually gets that AI detective suspicious in the first place. Coming up in Section 4, we're talking about the top triggers for an investigation. These are the red flags that the Connect system is literally programmed to hunt for.
So what sets off the alarm bells? Well, filing or paying your tax late is a classic. That's an easy win for them. Big, unexplained swings in your income or expenses from one year to the next, that's another. But here's a really clever one the AI looks for: your expenses to turnover ratio. The system knows the average for your industry. So if you're a writer and your expenses are suddenly way higher than every other writer, that's going to get flagged. Things like running at a loss for years on end, or using too many nice, round, estimated numbers, they all add up. Now stay with me here, because the solution to all this is actually simpler than you might think.
So, how do you go head-to-head with a super smart AI that sees everything? The short answer is, you don't. You just have to be prepared. Section 5 is all about your best and, frankly, your only defense: rock-solid proof. Because in any disagreement with HMRC, the burden of proof is always on you, the taxpayer. It's not on them to prove you're wrong, it's on you to prove you're right.
So what does good proof actually look like? Well, it all starts with a valid receipt. And here's a crucial point: that little slip from the credit card machine, that's often not enough. For a receipt to be considered proper evidence, it has to clearly show the date, who you paid, how much you paid, and, this is the big one, an itemized description of what you actually bought. Without all those details, that piece of paper just isn't the solid proof you think it is.
And here's a quick did you know for you. You are legally required to keep all your expense records for at least 3 years. But wait, it's 3 years from the end of the tax year they relate to. So for the 2025-26 tax year, which finishes up in April 2026, you've got to keep those records safe and sound until at least April 2029. It's a long time, so don't get caught out.
And how you store them is just as important as keeping them. Look, for physical receipts, an old-school filing system is fine. Just organize it by date and category, and please, keep it somewhere safe and dry. Even better, scan them as a backup. For digital records, the cloud is your best friend. It's secure, it's backed up, and it's easy to access. And yes, to be clear, HMRC is perfectly happy with digital copies, as long as they are clear, complete, and you can actually read them.
Okay, deep breath. We've talked about the threat, we've gone through the rules, and we've covered your best defense. So let's pull all of this together in our final section, a simple checklist to get your taxes right and, hopefully, give you some much-needed peace of mind.
All right, let's do a quick-fire round of do's and don'ts. Absolutely do keep meticulous records of everything. Do use a separate business bank account. Honestly, it will save you so much hassle. And do apportion your mixed-use costs fairly, just like our friend Anja did. On the flip side, don't claim for taking clients out for a meal. That's a big no-no. Don't try to claim for your regular commute or the ordinary clothes you wear to work. And please, never, ever assume that a few small incorrect claims will fly under the radar. Remember that AI, it notices everything. Okay, and now for a very important disclaimer. Please remember that the information we've shared today is for general guidance only. It's accurate as of November 2025, but it should not be relied upon exclusively to make your financial decisions. It's just not a substitute for professional advice that's tailored specifically to you and your business.
And for that level of certainty, for real peace of mind, where you know you've got everything right, you really should speak to the experts. For specialist advice on your business expenses and any other tax questions you have, the specialists at My Tax Accountant are the people to talk to.
You can give them a call on 0208-570-8531, or you can drop them an email at info@mytaxaccountant.co.uk. Seriously, talking to a professional is the absolute best way to get that confidence and certainty back in your tax affairs.
So we'll leave you with this one final thought to mull over. In this day and age, with AI watching and every transaction leaving a digital trail, is guessing on your tax return, even on the little things, really a risk you can afford to take?